In this video, we're going to talk about the investment banking associate position. Specifically, we're going to talk about how much you can expect to make. Now, the associate is essentially the second rung on the hierarchy. It comes after the analyst position, and you can also expect to make sometimes twice as much as what an analyst makes. While banks will hire directly out of college and undergrad for analyst positions, associates are more experienced hires. That means that they're either promoted analysts, they're laterals from other firms or other industries, or they're MBA hires. So in order to do this exercise, we're only going to be looking at the top firms in the world. We're going to be looking at the investment banks that generated the most M&A revenue in 2020. I'm getting this data from the Financial Times, and although the specific list of firms is going to change year over year, I think that this is a pretty solid list. All of our usual suspects are here. We have Goldman, MS, JP Morgan, and some of the elite boutiques. And the next thing I did, and it's a tried and true process at this point, but I went to H1B data and I looked through each of these firms, specifically looking for associate titles. I think when we select for location and year, we have the most comparable set of data. I also used my judgment to get rid of a couple of outliers. Next, we charted out all that data in Excel. And I'll be very clear, the H1B database only includes base salary, so we're going to have to come up with our own judgment for what a reasonable bonus is. I actually found this data to be extremely consistent, and I think if you're a first-year associate, meaning you just graduated from an MBA program, then you can expect to make between $100,000 and $120,000 as your base. Now, this base salary is going to increase every year, to the point in which you're maybe a third-year associate, you can expect to make between $150,000 and $200,000. And when I say base salary, I'm essentially saying the guaranteed amount that is in your paycheck on a bi-weekly basis. So in contrast, the analyst position, you might make between 80 and 100 for your base. So this is a pretty sizable increase. When you're a third-year associate, your base is going to be twice as much as what an analyst makes. But the real meat of where you're going to get paid is actually your bonus. And this is a common truism in all of finance, but a lot of the money you make is going to be based off of the bonus, and that's based off how well the firm does. So the bonus figure really does vary on a year-over-year basis. It depends on the state of the industry. It depends on how many deals your MDs bring in. But having checked multiple kind of data sources and speaking to my friends in the industry, I think you can expect your bonus to be about 100% of your base. So that means whatever you're getting as your base salary, many associates will take home the exact same amount as a lump sum at the end of the year. So this is clearly enormous. This is why people do finance, and this is also why attrition is so kind of cyclical. People are always waiting and holding out for their next bonus because they're about to receive half of all their compensation in one single payment. So if you incorporate the bonus, I think most associates are going to make between $200,000 and $400,000, with the midpoint being somewhere in that $300,000 range. To further elaborate on this point, I want to show two more charts. So on the left-hand side, we have the associate salary progression, assuming that your bonus is 75% of your base. And on the right-hand side, we assume that the bonus is 125% of your base. So if the bonus is about 75%, it means you're making $250 in your first year, and it grows to $350 by the time you're a third-year associate. But if your firm is performing well, maybe you're at an elite boutique that pays out a lot of the deal fees as bonuses, you could get up to 125% of your base as a bonus. And that would mean a range of maybe $350,000 to $450,000 as a third-year associate. So these are honestly pretty eye-popping numbers, and this is why a lot of people choose to go into banking. I'll also make the point that a lot of people leave investment banking after being an analyst for maybe 2 or 3 years. Now, there tends to be a classical kind of thinking that you'll make more on the buy side. And while I think that's generally true, investment banks are closing that gap. If you think about what a private equity associate makes in their first year, which would be 3 years out of school, they're making about $275,000 to $300,000. And an investment banking associate is going to make that roughly in their second year. So it takes maybe another year or two to get to that point. But honestly, the salaries are relatively comparable within a 1 or 2 year kind of gap. Now, there's a lot of other considerations because on the buy side, you'll also get carry and potentially profit interests. But investment banking is still a career where you make lots of money. And I think that's why a lot of post-MBAs will go into this position and just ride it out and keep trying to climb the ladder of IB. Now, a couple more points about associate pay. I would say, same as for analysts, same as the rest of the firm, elite boutiques are generally going to pay more. Elite boutiques are these firms that I shaded in the light blue, and they're essentially leaner investment banks that specifically focus on doing deals and nothing else. They don't have any other divisions. I've actually heard at Centerview, which is probably the top paying investment bank on the street, that a top bucket third-year associate is going to make in excess of $600,000, which is an exorbitant amount of money. At that second and third year range, I also think a lot of these associates will start to receive some of their bonus in stock. I've heard that associates can receive between 10 and 30% in stock. A lot of these investment banks are public, so it kind of makes sense. And I would think that's true across a lot of industries. At that kind of mid-level range is when you start to get stock in your company. One final thing, bonus ranges I've heard have been a lot more variable due to COVID. And you can kind of see that the performance across different firms has been all over the place this past year. Some firms have still been bringing in a lot of M&A fees. Some firms have switched to being more refinancing oriented. But I think across the street, you're essentially just seeing much wider bonus ranges than you would have in previous years. Now, in terms of getting to this associate position, the most streamlined path is definitely becoming an investment banking analyst. After 3 years at most firms, you can get directly promoted to be an associate. So if you think about the age range, you're going to be 25, while your other contemporaries, the other MBA associates, are going to be like 30 years old. So you'll have a huge time advantage. And when you hear about these people who become partners or MDs right around the age of 30, it's because they took this fast track path. At some firms like Goldman, they even do a promotion after 2 years because they're really trying to retain talent and prevent people from going into private equity or hedge funds. But alas, still most people who start as banking analysts will leave. They'll go to the buy side, they'll go to corp dev or go to school and never come back. And maybe about 90 to 95% of all analysts will be gone. So most associates actually get hired from elsewhere. I would say there's a lot of people who actually lateral in, maybe from other parts of the bank. A lot of the times you'll see someone in the equity capital markets group as an analyst, and then they'll end up into a product group as an associate. You'll also see tons of people from big four advisory firms or middle market banks that lateral into these positions. So I would say associates are actually the position that is the easiest entry into the investment banking world because there's so much demand for talent at this level across all of Wall Street. So if you are relatively capable, if you have that kind of fundamental skill set and you're eager to learn, I think that you are able to kind of directly lateral in. But still the most common path, I would say, are people coming from other careers who get their MBA at a top MBA and go directly into banking. Now, these people don't always have direct experience. Sometimes they come from consulting or marketing or engineering, and you really don't have to have any kind of direct experience to become an associate. And that is kind of frustrating for analysts who do have that experience. But I would say a lot of these people who are just becoming MBA associates, it's the first time they've learned about valuation and how to model. So if you're thinking about switching, I would kind of think of it like this. If you're already kind of in finance, if you're in an adjacent role, try to switch directly. It might take a little bit longer, a couple more years, but it avoids you having to pay for an expensive MBA. But if your path is a little bit stranger, if you never did finance in any capacity, or if you're in a different geography, you might have to get an MBA to get considered for one of these roles. So we've talked about the benefits and how you get there, but what do you actually do as an associate and why is it different? Now, I like to think about the associate kind of as the project manager for deals in investment banks. If the analyst is focused on the modeling and then the VPs and the MDs are focused on getting deals, the associate is the person who makes sure that all the materials are right. They corral the different groups and make sure that they're in constant communication with the MD. And they're responsible for checking kind of the quality of the work. A lot of the times they are referred to as kind of the quarterback of a deal, making sure that they're keeping everyone aligned and coordinated. And it really kind of is this project management skill. You need to be able to understand the analysis a little bit. You need to be able to go to meetings, and you need to be able to relay instructions from the MDs. I would also say you work slightly less than the analysts. Not that much less, but depending on the firm, you can work maybe 5 or 10 hours less per week. Now, as an analyst, a lot of analysts clown associates because they don't have the same kind of technical understanding, but I actually do think associates add a lot of value to the kind of system and hierarchy in banking. Their main benefit to analysts is that they tend to shield you from some emotional abuse. At least when I was in banking, the MDs would do their best not to yell at analysts, but they had no restraint when it came to berating associates. And as an associate, you just have to take it. That's part of the job. You're responsible for taking stress from the MD as well as the analyst and kind of just, dealing with it. Your goal is also to partially shield the VP from modeling. At that point, the VP is more focused on the strategy elements of the job and is less focused with the kind of nitty-gritty, granular aspects of analysis. And finally, I'll just quickly talk about associate exits. Now, investment banking associate exits are a lot rarer. There's no on-cycle recruiting process like there is for analysts. That tends to be because most of these kind of investment firms, they want to train people as early as possible. And a lot of associates will already have switched maybe once or twice in their career, and generally buy-side firms don't like that as much. I will say the diligent associates, the ones that really understood their material, they still got to exit to solid exit opportunities. Now, these opportunities were a little bit more unorthodox. It's rare to see one go directly into like a mega cap fund, for example. So they tend to go to places like family offices, maybe strange locations, corporate development roles, or pension funds. These are all great jobs, but sometimes they lack a little bit of that traditional cachet. And there are, of course, people who stay on in investment banking. And I would say maybe 1/5 or 1/8 of associates become VPs and make it past the grind and finally get promoted. So there definitely are a lot of options to you available as an investment banking associate. So hopefully this was an interesting kind of primer for you as you think about a career in finance and banking. I want to let you know that we have a course on our website that'll teach you how to break into private equity. It's going to teach you how to build LBO models as well as deal with case study questions. Thank you very much for watching, and I'll see you in the next one.